We got the gold chart here open up. This chart here is a little tricky though. Of course, I know we said the monthly chart is typically where we want to make our direction. Um, but as you can see, there's a lot of retracement on the monthly chart. A lot of volatility on a monthly basis. So we try to avoid trading so much on the monthly chart here. So we kind of maintain our weekly positions as our highest time frame. Now, this right here in general is showing us that we need to be looking for good buying opportunities. Um, we've been able to maintain this 96-day moving average. This line has been steady. We could even probably dip down to the 200-day moving average, but due to its uptrend, it's more than likely going to maintain this and come up here, more than likely probably double top. Hopefully double top. But of course, we also have to make sure we're trading the volatility throughout the week and the daily charts, because you don't want to get caught up on a weekly play and get stopped out due to daily volatility. Okay, so let's make sure that we're in and out of the market on the daily charts while maintaining an overall position on the weekly. Okay, if there's any questions about what that means, leave some comments and I'll get back to you. So again, let's look at this 4-hour chart to refine our position even more. So we look at what happened, right? We have a good, nice little bull run. Everything's all peachy keen. Retracements hitting our levels like we should, coming down, bringing our price action to the respectable levels here on our EMAs, right? Now, one drastic change here is this doji. Take note of this doji here, okay? Now that doji, or this candlestick, is indicative of a failed breakout, okay? This is a failed breakout. Inevitably, we needed to break out above this line here for it to continue to the upside. That didn't happen. This price point here was very crucial. Didn't break that level, so we came back down. This right here, if you ask me, is kind of weak. It's probably not going to hold this level. More than likely, we're going to see the bottom of the cloud here, somewhere around 1756, and go back up. This would be the safe route to take. Of course, this is the prime price. This would be the best price that we can possibly get is 1739. If 1757 comes around, 1750 comes around, we'll definitely pick up some positions there. We're not going to solidify our entire portfolio at those rates, but we will pick up some positions there. Going further, we look at this daily chart, and it's kind of falling in lines corresponding with what we saw on the 4-hour chart. We could definitely see a major dip on the daily chart down to this probably this level here, in between here. We'll call this the 1750 level, right? And this would be a good time to look for some long positions. The market could definitely drop down as far as the bottom of the cloud here on the daily level, but it's probably not likely given that we have a very strong weekly trend here. If in fact, because gold is one of those charts that you got to be careful not to get caught up in the retracement, because it'll retrace 100%. It'll retrace all the way through, but that's not the actual direction. So we got to be careful. And so this right here is probably what's going to happen. Where I see Monday, Tuesday, Wednesday, even maybe even just Monday, sell, capture these prices going into Tuesday, Wednesday, and Thursday. Of course, this is just one day into the future that we're talking about. We could look and see what's going to happen later on. So stay tuned in our live trading session.